Good afternoon, everyone. Welcome and thank you for taking part in our earnings call for the fourth quarter and also presentation of the complete financial statements for 2021. It was a very important year for WDC. Today, we'll have our comments about our earnings as usual. And on the platform, as you already know, on the left, you can submit your questions. They're open as of now. You can submit your questions and you can also view the presentation, not only here on the platform, but also via the link we sent by email or the link on our website. I'm going to read the disclaimer and then I'll hand over to Vanderlei. Next slide, please. So the statements contained in this document regarding WDC Network's business and growth prospects are based solely on the management expectations for the future of the business. These expectations depend substantially on market conditions, the performance of the Brazilian economy, the sector, and international markets, and therefore are subject to change without prior notice. All variations shown herein are calculated based on the numbers without rounding. This performance report includes accounting and non-accounting data, such as operating and pro forma financial data. Non-accounting data was not subject to review by the independent auditors of the company. So with that, I'd like to hand the floor over to Vanderlei, who will begin our presentation. Thank you, everyone. Vanderlei, you are mute. Please unmute. Actually, he's not. Please hold. We are waiting for the audio. Please hold. This is Rafael speaking. I'm going to hand over my audio to Vanderlei. Please hold. Can you hear me now? Okay, I apologize for that. Okay. Good afternoon, everyone. As I always say, every time we begin this earnings call, I always see that it's a great moment for us to exchange ideas, to explain a little bit more about the company, and tell you about our performance, not only in the quarter, but this time we're going to show you what happened all year. Once again, I'm very happy to what I have to show you. After all, this fourth quarter, once again, we beat our total sales record, achieving 351 million total sales in this fourth quarter. That means 18% higher year over year. Net revenues increased 30.5% year over year. So we achieved 276 million BRL. And the EBITDA margin was 27.2%, 1 percentage point over 3Q21. So in fact, in a quarter that we had a lot of difficulties with the entire market was suffering a lot, we have these results that are better, I'd say, in terms of margin and higher sales and growth. Another important thing that I'd like to highlight is that the solar business unit within the corporate segment continues to move forward. We grew 200% year-over-year. The enterprise business unit, which is in the corporate segment as well, grew 16% year-over-year. And we have great news, which is the pursuit for operating efficiency and recovering the operating margins. So the consolidated gross margin, net margin was 27.6%, and the consolidated adjusted EBITDA margin was 27.2 for the fourth quarter. So that is an improvement in the company's baseline quarter after quarter after quarter. So we had a follow-on in the beginning of this year, actually, in January 2022. So we had a follow-on. So as you've seen, we did that so we can unlock our operations in the retail market. So now we're CVM 400. That means that improves our possibilities in terms of our share liquidity. So the snapshot for this fourth quarter is very positive, as you can see. What concerns me the most is to know that our business is on the right track, that our business is performing as planned. And by showing you this data, that's exactly what we're saying. On the next slide, I'm going to show you the evolution of total sales. You can see that in the quarter, we grew 18.3%, going from 297 million to 351 million. And in the year, we evolved 45.3%. Once again, we are significantly growing our top line, and our sales efforts are working. We're evolving in a very strong manner in this past year. The other important aspect on the next slide is dividing the two major segments that we have. As you know, we have the telecom division and the corporate division. And inside the corporate division, we have the solar business unit. As you can see in 4Q21, the telecom segment presented a performance that was 17% lower, even though it grew 21.5% in the year. So total sales in telecom for the year was 756 million. And it's no secret, we had already mentioned this to the market. In the fourth quarter, we felt a slight slowdown in providers in relation to new customers, new subscribers, therefore slowing down that growth rate. We are always a factor that measures that because, after all, we sell the products that will be the kits for subscribers and these providers. So I always like to say that we have a very strong thermometer. We usually know a little bit beforehand how the providers will perform in the future. In the corporate market, what we've seen was an increase of 66% quarter over quarter. So 125 million in 4Q20 to 208 million in 4Q21. And in the year, we grew 84.3%, a very significant figure, very robust growth, mainly driven by the sale of the PV energy kits. On the next slide, we can see a zoom of the solar business unit, which is inside the corporate division. As you can see, in 4Q21, we grew 200% over 4Q20. From 34 million, we went to 102 million. And in the year, we had an increase of 367% growth. We can no longer disregard the size of that business, of our solar business unit in WDC. As you can see, we've achieved 333 million total sales in the year. On the next slide, we can see the evolution quarter after quarter of the consolidated sales. You can see that we had a robust pace in growth in total sales. And in 3Q21, we could already see a sort of stabilization that we were expecting. And in 4Q21, we even had a drop in the total amount of sales, mainly resulting from that slowdown that we felt in the telecom market. That was something we already expected. We believed that someday that would happen, and it did happen in the last quarter. Here you can see the importance when we compare all three segments. You can see that solar is at 26% share in our total sales mix, enterprise 27.1, and telecom 36.3. So this is a clear vision of how things are evolving. The quarter definitely posed many challenges in product delivery and a number of other things, but we believe that in general our results were very good. Now I'm going to hand over to Andre Valente, our CFO, and he's going to give you more color on some of the other figures. And then I'll come back to talk about our vision. I'll talk about our future vision and answer any questions you may have. Thank you. Andre? Good afternoon, everyone. Next slide, please. So on this slide, we're showing the evolution of the number of new TAS agreements. As you can see, we have a decrease in the number of new agreements that started in the fourth quarter. We started off with 309 new agreements compared to 440 year over year. So that's a 29.8% drop, mainly resulting from the slowdown in the telecom segment and decreasing the number of new subscribers with providers. And that resulted in decreasing the number in the business unit as they're the main consumers in TAS. The good news is that we were able to increase our average ticket. Even though we had a decrease in 29% in the number of agreements, we were able to go from 253,000 BRL to 322 for new average ticket. And that means that the drop in PSV rentals for TAS was 99 million, so that's the middle chart, compared to 111, as you can see, year over year. The other good news, the other highlight is that we were very selective in terms of margins. So in this quarter, we were very careful with our margins and our capital. So as you can see, the CapEx that we spent in the quarter was 18.6% in the quarter, compared to the same period in 2020. So we were able to increase our margin in our TAS agreements. Even though the PSV dropped by 10%, we saved almost 19 percentage points in CapEx. On the next slide, we have, please, next slide, please. So total for the year, so this is year over year, and total PSV rentals achieved 480.9 million in 2021 compared to 393 million year over year, and accounted for 32% of total sales of the company compared to 29, and CapEx only increased 2%, very close when you compare year over year. And as you can see, it went from 220.7 to 225.2 in 2021. On the right, on the top chart, we have the markup. So we divide the 480.9 million by the total capex of 225. So the markup is 2.14, which is almost 20% better than the markup that we delivered in 2020, which was 1.78. In the revenue backlog, that's very important for the company, showing that the future revenues that will still be recognized and accounted for is always also entered our cash. So 591.9 million, and year over year we have an increase of 45.3%. So that was 591.9 million. That's very important information. And when you have insured future revenues, that increases predictability, not only of revenues, but also of cash that we expect to receive in upcoming years. So that's a very important indicator for the company when we consider our strategy in TAS. On the next slide, we have the breakdown of our adjusted EBITDA per segment. As you can see in telecom, in the fourth quarter 2021, we had 53 million EBITDA compared to 55 in the same period in the previous year. And here, I'd like to highlight the margin improvement. The 55.4 million in telecom last year accounted for 48.8% margin, and the 53 million that we see now means an EBITDA margin of 49.5%. So even though there was a nominal drop of 4.3%, we had a margin improvement. On the next slide, we have the adjusted EBITDA for the corporate segment. As you can see, nominally it went from 16.7 million to 22.1 million, a 32% growth year over year. With the growth, which is mainly resulting from the solar business unit growth, and brought in that improvement in volume, and in percentage-wise, the margin is a bit lower given the mix. And as is known, the margin in solar is a bit smaller or lower than the other segments. And other segments, we're talking about professional audio and video and enterprise mainly. On the next slide, we have the consolidated results. Next slide, please. The net revenues in the fourth quarter, we have 276 million. That means a growth of 30%. And year to date, 1.66 billion. That means 48.5% growth. When we look at the adjusted EBITDA and margin in the quarter, nominal EBITDA grew from 72.1 to 75.1, a growth of 3 million BRL year over year, meaning 4.2% growth. The percentage margin drops according to company plan, resulting from two main effects. The first one I'd like to remind you is the growth of the solar business unit, which brings in a lower percentage margin according to the company mix, as Vanderlei showed us, meaning almost one-third of the company, and also the extension of the TAS agreement terms. When we do that, we benefit the revenue backlog in lieu of the revenues recognized in the period at hand. In the year total, we achieved 278.3 million adjusted EBITDA with a margin of 26.1. So you see a growth of 20.3% from one year to the other, and a drop in the percentage margin for the same reasons that I explained for the quarter. The adjusted net income on the right, we have 24.3 million BRL in the quarter, excuse me, and that means a drop of 17.8 compared to the 29 million in 4Q20. But we'd like to highlight the evolution that we've observed in 3Q to 4Q. And for the year, we have 76.7 million in adjusted net income, meaning a drop of 2.1%, also resulting from the effects of the increment in the Selic interest rates and also the effects that have been shown in the operating effects of the EBITDA. On the next slide, we have our net debt over EBITDA indicator, 0.91 times. As you can see, out of the gross debt of 589 million, we ended the year at 337 million in cash, and minus the gross debt, we have a net debt of 252, and the 252 million compared to the 278 million in EBITDA means 0.9, almost 1 for total net debt over EBITDA for the company. As you can see, we, out of the total funds of the IPO that we had in July, we started the year with a strong cash flow, even though we delivered a volume of new TAS agreements of 480 million BRL. So this is to show the good cash generation that the company already has, even though we have CapEx for the new agreements that we have begun. Another thing that we'd like to show as well is the coverage that we have of our debt with the backlog of revenues. So the revenue backlog that we showed you of 591.9 million versus the net debt of 252 means we have approximately 2.3 times our debt saved in the future backlog. And here is the schedule of not only the amortization of the gross debt,